Coming up on Market to Market, a Beltway budget deal threatens agriculture's safety net. The WHO lights a firestorm over a breakfast favorite. And U.S. farmers enlist old techniques to round up superweeds. Those stories and market analysis with Sue Martin next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, October 30 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. Consumers tightened their purse strings a bit last month as concerns over landing a good job were coupled with disposable income worries. According to the Conference Board, consumer confidence fell 5% last month over fears of a soft economy. The Census Bureau announced new home sales dropped nearly 12% in September. Despite a pullback in those sectors, the Commerce Department says purchases of durable goods jumped 0.8% last month, and consumer spending, which drives about 70% of economic activity, rose 0.1%. All those factors are being scrutinized by the Federal Reserve Board, which will, again, entertain interest rate hikes during its December meeting. Congress, which often finds itself rushing towards a brick wall, made a quick turn to avoid smashing into budget shortfalls and debt ceiling deliberations. However, on the road to a balanced budget, agriculture briefly found itself caught in the middle.
Having listened to our members and listened to the American people, we have a budget agreement. This agreement will protect our economy and reduces the deficit.
In a move reminiscent of Houdini, congressional leaders freed themselves from the chains of gridlock this week, pushing a new 2-year bipartisan budget and debt deal through the heavily divided House of Representatives. The legislation heads off market-rattling default and allows the government to borrow freely through the remainder of President Obama's second term.
This is a very complex deal. This thing must have taken weeks, probably months, to negotiate, and it's dropped on us in less than 48 hours.
The accord increases spending equally by $80 billion over the next 2 years. Offset by cuts in proceeds, deficits also would shrink $80 billion across the next decade, while over $32 billion in revenue accumulates. Budget hawks zeroed in on the sale of 58 million of the over 695 million barrels of crude in the nation's Strategic Petroleum Reserve to turn a profit. Economists warn the proposed sale of up to 9% of emergency inventory beginning in 2018 is the right idea at the wrong time, given stagnant oil prices.
On this vote, the yeas are 64 and the nays are 35.
The Senate gave approval early Friday, and the measure is expected to become law ahead of next week's debt ceiling deadline. The president vowed to sign the bill as soon as it reaches his desk.
This agreement is a victory over the loudest, most extreme voices in the Republican Party.
While some Democrats claim to win, agricultural groups had disputed the $3 billion cut in crop insurance support as part of the deal. 90% of total U.S. acreage is federally insured, with 2014 premiums totaled at over $10 billion. Earlier in the week, farm state legislators orchestrated a congressional backtrack, declaring the proposal would weaken public-private partnerships integral to the rural economy. House Ag Committee Chair Mike Conaway issued the following statement regarding the agreement. I want to thank my colleagues who have made it very clear over the last 24 hours that the attempt to gut crop insurance in the budget agreement was not acceptable. Our nation's farmers and ranchers did their part in reining in our nation's debt in the 2014 Farm Bill, saving an estimated $23 billion.
The agreement isn't perfect by any means. Somebody got a bipartisan agreement in a town that isn't known for a lot of bipartisanship, you're going to see bricks flying from those that don't like the fact that there's a bipartisan agreement. But there is. It's a solid agreement, and I told my colleagues there isn't any reason why any member should vote against it.
The International Agency for Research on Cancer issued a controversial finding this week that daily consumption of processed meats raises chances of contracting colon cancer to 18%. According to the National Institutes of Health, colon cancer risk in the U.S. is already at 6%, leaving consumers to weigh the risks. Consumers, like farmers, are not averse to some risk. The use of genetically modified seeds decreased tractor time and chemical use at the risk of creating herbicide-resistant weeds. The problem has grown over the past 2 decades. And as producer Colleen Bradford Krantz discovered, eradicating superweeds requires diligence and an old way of thinking. Paul Yeager explains.
In the 1950s, scientists began noting the ability of certain weeds to survive herbicide doses that typically killed similar plants. By 1975, the number of weed types identified as being resistant to particular herbicides had begun increasing worldwide by an average of 11 cases per year. The United States faces the greatest battle with resistant weeds, followed by Europe and Australia.
Unless we start doing things differently, there's going to be the day rather quickly on larger and larger percentage of acres where we don't have herbicide options, and that's going to be a very scary situation.
The problem, which once seemed like a distant threat to many, is now forcing farmers in some regions to hire crews to hoe, cut, or pull the weeds, a practice largely abandoned 20 years ago.
You'll go through a field and cut them out, and in 2 weeks you'll see some more that's popped up, and we go back and get those again. Because each one that goes to seed is several thousand seeds that will be resistant that you'll deal with the next year.
Experts agree the problem of resistant weeds ballooned with the expanded use of glyphosate herbicide, introduced by Monsanto in 1974 under the brand name Roundup. The company's genetically engineered Roundup-ready crops, the first of which were released in 1996, tolerated glyphosate treatment. Farmers rapidly and widely embraced both.
It changed our lifestyle as far as farming. Weed control was so easy. It wasn't a nightmare anymore, and we had less hand chopping and things like that, and it was just a very good product.
According to the U.S. Department of Agriculture, herbicide-tolerant crops now account for 94% of U.S. soybean acres and 89% of cotton and corn acres.
As we use products more and more over time, the potential to develop resistance is there, and so we're starting to see some challenges with some particular weeds in the field.
The first few years of a chemical's use may leave behind only a few resistant weeds, those with the right genetic code. Those weeds drop their seeds and become more prominent in subsequent years if the same weed killer is used repeatedly. In Arkansas and other southern states, the most problematic weed is Palmer amaranth, more commonly known as pigweed or careless weed. At first, just a few scattered stray weeds known as escapes remained in the field after herbicide was used.
Around 2009, I had sent some samples off of escapes in the fields, and they came back like 10 to 15% resistant to glyphosate or Roundup. Then the next year, I sampled them in the fall and sampled 3 fields. They came back 55, 85, and 100% resistant. That's how much it jumped in 1 year's time. Hello, Billy.
Texas farmer Greg Good noticed an increase in resistant careless weed in his cotton fields last fall.
In this particular field, you know, I had 1 or 2 last year, and then this year it has really exploded.
Good spent many days over the past 2 summers weeding his fields by hand.
I would spend anywhere from 30 minutes to about 2 hours pulling weeds.
Palmer amaranth is particularly tough. Even after being cut and lying in a field, it can still develop roots and go to seed. Several northeastern Arkansas producers, including Piggott farmer Mike Morgan, estimate that hiring extra help to weed their cotton and soybean fields adds up to $30 an acre, on top of the cost of alternative herbicides. But farmers like Morgan say that ignoring the weeds could mean losing a third or more in yield.
It's a yearly fight for us now. We just know when we start a crop, we're going to fight resistant pigweed.
According to the International Survey of Herbicide-Resistant Weeds, almost 250 different plant species worldwide are resistant to one or more herbicides. Kansas, California, and Illinois top the list in the United States. In the Midwest, farmers already are facing off against tall water hemp. Southern farmers hope their peers to the north heed their warnings.
2010, I just see a spotted resistant pigweed just here and there in the fields, just not enough to really even worry with. If I'd had any idea, I'd have went right there and pulled them up, hauled them off, and thrown them in the hole and burned them like we do now a lot.
Most experts agree farmers must begin using a wider range of weed control options, including alternating chemicals, rotating crops, and increasing tillage when appropriate. Producers also are adding cover crops or looking at equipment that crushes weed seed. Both USDA and the University of Illinois at Urbana-Champaign are testing the Australian-built Harrington Seed Destructor. The implement is designed to collect and crush weed seeds as they come out of a combine. And chemical companies are attacking the problem as well.
What we've come to realize is that we need multiple mechanisms of action in that overall weed management system.
Monsanto is seeking government approval for a new dual-ingredient herbicide called Roundup Extend, which will combine glyphosate and dicamba. And last year, Dow AgroSciences gained government approval for Enlist Duo, a combination of glyphosate and 2,4-D. However, these new combinations may only buy time. And new herbicides, the last one having been created 3 decades ago, are unlikely to be introduced anytime soon.
When we think about the number of companies and the number of new products that were explored several decades ago, there was a lot of that going on. So a lot of that research and development has slowed down in the last few years.
In Clay County, Arkansas, extension leaders and farmers set up a zero-tolerance program to eliminate problem weeds from fields and nearby ditches.
We had just a handful that started out with what I call the zero tolerance program, and then as others saw the benefit, they also got on board with the program and did the zero tolerance program. Some of them by choice. Some of them realized that their landlords was watching the other farmers doing a better job of cleaning up the field and looked better. The landlords liked that good, clean look. They kind of put a little pressure on them. You could call it peer pressure.
Traditionally, rice producers in the area have burned stubble after harvest, but some farmers have started to use fire in many of their fields. Experts say seeing a few remaining weeds may indicate more than a faulty sprayer or drifting chemicals. And for Cagle, ignoring the problem didn't make it go away.
When you figure out that you've got them, it's a mess. But if you start before you get them, it would be a lot easier. And I did that. I heard these stories coming from south of us, and I thought, that'll never happen to me, I don't do that. Well, it did.
For Market to Market, I'm Paul Yeager.
Next, the Market to Market report.
Grain markets were mixed this week as on-farm storage went up against the prospect of a large South American crop. For the week, December wheat gained almost 32 cents and the nearby corn contract rose nearly 3 cents. A weaker dollar and potential for near-record Brazilian crop pushed the November soybean contract 10 cents lower. December meal prices stayed close, falling 70 cents per ton. In the softs, December cotton gained back 56 cents per hundredweight. In the dairy parlor, November Class 3 milk futures lost 14 cents. Over in the livestock sector, the December cattle contract fell $1.67. January feeders lost $2.30, and the December lean hog contract declined $4.40. In the currency markets, the U.S. dollar index lost 0.2%. December crude traded $1.99 higher per barrel. COMEX gold declined $21.40 per ounce, and the Goldman Sachs Commodity Index gained nearly 7 points to settle at 363.55. Here now to lend us her insight on these and other trends is one of our regular market analysts, Sue Martin. Sue, welcome back.
Thank you, Mike.
It is the beginning of fall. We're starting to feel some colder air out there, and some of that colder air seemed to have sparked the wheat markets this week. Tell us a little bit about this 32-cent in Chicago wheat rally.
Well, I think first off, you have wheat that normally tends to gain on corn into the end of October. It had been doing real good, and then all of a sudden it lost some of it, and then it gained it all back. So that was part of this rally. You also have a spread between Chicago and KC, and so, you know, that was incentive for the Chicago wheat to gain. And then on top of it, continued dryness, the rains not being what we hope for out of Oklahoma, Kansas, you know, that type of thing. They're still dry. And then you have dryness also in the soft red wheat. So that's being incentive to support the market. But beyond that, the Black Sea, Ukrainian wheat remains dry. Production is down. The Russian wheat crop, not what they had hoped for, down sharply from a year ago. So all of that combined is supporting the wheat market. And you know, in years past, and I've been in the markets a long time, it has always been that the wheat market would have to lead first sometimes to get a market totally coming out of these funky markets and sideways, dull, trendless markets. And maybe we're trying to do some of that. I like the wheat market longer term. There's plentiful supplies of wheat around the world, no doubt. But we always go from extremely good supplies down to tighter supplies, and I would not be surprised. Argentina, their crop is down, the lowest in 3 years, down 16%. You know, Argentina hasn't been exporting much wheat.
Right.
And even though Daniel Scioli says he's going to lower, now he says he'll lower export taxes.
And he's one of the candidates running for president of Argentina.
Yes, he's one of the leading contenders. Mauricio Macri is the other one. And Mauricio says he will do away with corn and wheat export taxes, but work the beans down. Daniel, about a week or two ago, says, and he's trying to entice the farmer to vote for him, says, well, I'll lower the corn and wheat, but I export taxes, but I'll do away with the beans.
Okay.
And so those are big things. Now the question is, will Daniel, if he wins, follow through?
Right.
It almost looked like a political ploy.
Shocking.
Yeah, we've never seen that before. But I sense that, you know, they haven't been exporting much corn and wheat. So I wouldn't be surprised if they aren't exporting.
Can
I don't
we
see
push
much.
this up towards 550, do you think, in the short term?
Well, 530 to 535 is your
Okay.
first level, and then up towards 550. We're doing this in baby steps.
Okay.
You know, one step at a time. But
Gotcha.
yeah.
Well, now let's see if this is going to pull us forward. Let's talk the corn market. Saw a 3-cent run. Does this have some strength to carry on?
Well, you know, we closed higher for the week. Usually that would portend that you're going to take a look at this week's highs and take them out. The resistance for December corn is the 389 level, 390. If we can get through that, of course, again, it's just layers until you get up over that 402. Then you start thinking about the 440. The one thing about the corn market, and I could talk about corn till
Sure.
a long time tonight, but the one thing about the corn market is, you know, China, which had really given it its little tail down here recently, was that China is talking about doing anti-dumping investigation on DDGs. China is the world's largest importer of DDGs, and they're our largest customer. And so if something happens, and it's not just the government wanting to do this, because they've talked about already that they're going to expand their ethanol industry because they have a boatload of awful, crappy corn that they're trying to get rid of. They had an auction for 2 days this week of 5 million metric tons and didn't move a bushel of it.
Okay.
And so they know they've got to get rid of this corn. And if they keep allowing DDGs to come in and compete, not to mention China has, you know, industrial industries that end up with a byproduct of DDGs. They have an ethanol fuel industry too. It's not very big, but this isn't the first time they've complained. DDGs have dropped it. They used to kind of hang with the corn price.
You bet.
But because we've been bringing in U.S. DDGs, which was cheaper, sorghum, barley, copra.
All the competing grains,
yes, they're complaining, and it's the second time they've complained, but this time I think their complaints are going to be heard because China's government is, recent DDGs in China has dropped 20 cents below the price of corn. They're concerned, they're losing money, and in the meantime, the government wants to get rid of all that ratty corn that they've had.
So they're challenged. Now, as we're talking about China, we did see China step into the soybean market this week and make some purchases. We saw 2 million metric tons, and the bean market did nothing. Sue, what do we expect here in this next week?
Well, and even today, there was a sale of 120,000 metric tons of beans. I think what we're looking at is beans did close lower for the week.
Okay.
And I think that when we look at beans, we have to be a little cautious with them. They are still in a range with a little bit of an upward slope bias. I go back to Argentina. If you look at export sales out of the U.S., soybean meal and soybean oil is like, 17% ahead of a year ago at this time. Soybean meal is running around, don't hold me to this, around maybe 4 or 5% over. But the beans are lagging. They're about less than 7% under a year ago. So we're crushing the beans and sending the products out the door. However, loadings of beans out the door is also 7.7% ahead of last year at this time. So they're taking the beans as fast as they can get them. China is expected in the fourth quarter here to take a record amount of beans for imports. So, it's very interesting because when you look at Argentina, we have to go back to what plays out of that country for these elections and how the farmer lets loose of all those beans he's been hoarding. Because if they get processed and exported, our demand for our products could slip.
Right. Now, given that China is going to buy a lot more, do you see beans as a bullish market moving into this fourth quarter?
Yeah, I do. It's, I think you could slip down and then turn and start, or if we keep in this sideways upward slope, I fear you'll peak around the 26th of December, maybe the turn of the year, because now you're into Brazilian crops. And we have to watch Brazil's weather this year. It's very critical.
All right. Well, now let's talk the livestock market, Sue. We saw cattle all over the board over the last 2 weeks. Broke a little bit this week. Where do you see them going next week?
Well, I see cattle, our indicators have been playing its hand pretty well for cattle. And I think that when we finally got a $20 rally in the fats, all of a sudden we started to see people who were panicking start to turn back to being bullish a little bit. It seems like I can come up with more reasons to be bearish than to be bullish. But we are following a very seasonal pattern right now. That started about the 2nd of October. We found our lows, very seasonal. And you tend to work your way up and then drop back down into about the 2nd of November, which I think, ironically, that fits patterns of other technical indicators that we're using. And then pick up and rally into about the 5th of November. From there, because we have to keep one thing in mind, we've had over a $50 break in cattle prices, and we've had a huge break. Do I think that the lows are in? I don't know if they're in or not, and that's not very often you hear me say I don't know. I think that if they are, then we're going to take another look at them. And I suspect it'll be in December when we get this. However, I do think we have to keep in mind we broke 7 months in a cyclical count, and we closed the month higher. So therefore, that normally should portend that you'll go up, take another look at October's highs, and if that happens, I think it happens before the 13th, 16th of November, it might happen this next week.
Okay, do you see feeder cattle following that same trend as fats? They typically follow the same cycle?
Yeah, I think they will, but what's interesting is then I think by the 13th, 16th, or 11th, they peak, everything's done, and then we start this demise back again into December. If we break into December 5th to the 8th, I think you've got a low. Because that'll be counter-seasonal. Or we get in down towards it, we bounce into it, and it'll just give it an incentive to sell it again. And then you break on down into the last day, well, around the 26th of January, which is a Sunday, or I mean December, so that's a Sunday. So you'll have to pick Christmas Eve or the day after, probably the day after. I think what's going to happen in this cattle market is, it's ironic too, it's been following the pattern of 1993 very closely, with one exception. On October 2nd, we put our seasonal low in, and the market started to take on a seasonal presence. Now, all of a sudden, 1993's pattern and the seasonal are right back together again. I can't express the importance of Monday. Monday is, on a seasonal basis, is when the average of all years, you'll tend to put a low in and turn and rally. And then you'll rally in some years into early December. And especially if it's a bullish year or anything bullish is coming out of it.
Okay.
If it's a bearish year or a bearish complexion to the marketplace, and there's a million reasons for this market with the meat product like it is, and now what's happening in hogs certainly isn't a good thing for cattle.
All right, now, Sue, we're going to talk hogs in detail in our Market Plus segment you can find online, but in the next 5 seconds, hogs up or down next week?
Up.
Hogs up next week.
Yes.
Well, Sue Martin, thanks so much for
Might
taking
not
the time
hope.
to join us. That wraps up this edition of Market to Market, but do turn into our website. That's where you can find that Market Plus that I mentioned on the program, as well as other parts and other recordings of this program. You can also interact with us through our Twitter and Facebook feeds, and join us again next time when we'll examine how our nation's veterans are serving their country on the farm. So until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.